Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is July 8, 2012. I'm going to try and keep this video as short as possible, but let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. Let me just load my drawings in here. And then what you'll see is this 137.09 that held up pretty well. We fell right on this 135.44, which was the previous mathematical calculation. As you can see, just a quick overview. These mathematical calculations is something that I'm using in combination with pivot points and gap fills, gap windows, and Fibonacci retracements, and moving averages and such like that. So when a calculation is around a pivot top, or like these two resistance points here, then it kind of shows me that that's pretty much where price will bounce off. We did close above that, but then we ended up pulling back, and then definitely pulled back very much a lot on Friday. Okay, so let's take a look here what happened. Just a quick overview before I do that on these mathematical calculations. They are created, as you can see, these lines are in different sizes, and what I normally do is when I make that calculation, I normally start it off on the day that I actually make it. So this calculation, which is 135.44, I calculated it on this day. And this 137.09, I calculated it on this day. This 141.36 right here, I calculated it on this day as well. Okay, so that's pretty much easier for me to see when the mathematical calculation was created, what day I created it, and to see if it's actually going to hold true for any support or resistance lines. And in this case, we had this 135.44 that price went right into and then just bounced right off, and then we broke through this 135.44, opening above these two moving averages, pierced through this 135.44. We had a bounce intraday. We went right into this 137.09 level, and then we came right back down. The close on Friday was 135.49, which is about 5 cents off of this 135.44, so that's not too bad. That's pretty good. The gray lines are a hard number mathematical calculation based on a specific pattern on any chart, and these pink lines here are a mathematical calculation based on percentages, based off the same pattern on each chart. I'm also coming up with a third mathematical calculation, and the reason for all these mathematical calculations, eventually you're going to see a lot less lines, and the theory behind that is if I get 3 different mathematical calculations that all coincide with a single price, then that price is something that I'll be definitely interested in, and hopefully I get better accuracy. So in any case, what happened on Friday was we definitely got news on Friday, and then we had a bit of a sell-off, and the volume wasn't all that great either. The volume was at 151 million, which is our average, but then the actual sell-off was about $1.30, which is not such a big sell-off indeed. But we will have some support here at this 133.99 level. It also coincides with these two moving averages here, which tells me that we should get at least some support around this area here, unless we have some major bad news coming out of Europe. And those news are the movers in the market, and these calculations will not work when you have a lot of news that will induce technical damage. In addition to that, we are having earnings season coming up. It's right around the corner, so you want to be careful about that. No technical analysis will assist you, in my opinion, whenever there's earnings announcement. So that's something that you want to stay away from. I normally give it about maybe a week before or a week after. If there's any earnings that's coming out, then I normally stay away from that stock, because a lot of volatility comes into play with any specific stock with earnings coming up. Okay. So what happened on Friday again? So we came down, we actually came all the way down to the low of 134.85, and we got a bounce, and we created this doji candle here. So the open was at 135.47, and the close was 135.49. So it's it was 2 cents off. So this is pretty much a doji candle. But one thing that I always stress is we always need to pay attention to volume, or at least that's something that I like to pay attention to. Okay, so as you can see here, the volume wasn't all that impressive for a move this big. Okay, so the volume, when I see a big down move or something that's created a pivot or off a pivot or a breakout, I like to see volume. It doesn't necessarily need to have volume, but it does definitely, from my analysis, it puts the odds in your favor a lot more than if there wasn't any volume. So yes, I do expect it to at least hit this 133.99. Actually, I take that back. Maybe not at least, but if it hits the 133.99, then I would expect some support, either intraday or maybe even for a swing trade. And then your next target obviously here will be at gap fill before you get a bounce. But in my opinion, this volume wasn't high enough to justify this move down here, which is probably why it recovered towards the end of the day, creating this doji candle. In addition to that, like I've said in the previous videos, when you're fighting a low volume, it's very hard to short. Basically, it's hard to short when you have low volume. The volume was definitely low at 151 million shares traded. This is the start of the day. This is the end of the day. Each candle is 10 minutes. So we started coming down, and we created this bearish, somewhat of a bearish consolidation pattern. Actually, not really. We started coming down, and then we broke up, and then we started consolidating, but then that consolidation pattern failed. Okay, so exactly at the time of about, I think it was 220, we just started coming back up. And again, this is probably institutional buy-ins. Okay, these are the Feds or the institutions that are propping the markets higher, and this is common to see anytime you have the market that's in low volume. It's just because simply the fact of the matter is there's not enough sellers. Okay, you need to have enough sellers to justify in any continued down move. Okay, so we closed right above this 135.44, which is 135.49. Okay, so this level is still a pretty good level. I mean, we actually gapped right into this level before getting a bounce. Okay, if you can see that intraday, we came under, right, and then we broke under, and then we had some resistance. Remember, resistance turns into support, and support turns into resistance, and then we come back down. We come close to this 135.44 number again. We finally come down. We break through this 135.44, and now we come back to retest it on this candle here and this candle here. So really, in essence, we're just trading in general right on this 135.44 level, just choppy sideways right around this level here. So what do I expect for next week on the SPY? That's the big question. All right, like I've been saying in the previous videos, I've been waiting for a chance to short this market. At the 137.09 was that signal for me to short. However, because the volume is so low, I stayed away from shorting simply because I have to follow my rules. Obviously, that low volume didn't really help the markets very much on Friday, obviously, because we had that bad news and we actually gapped down. But as you can see, that gap really didn't affect the markets very much. After the gap happened, yes, we were down, but it's only down a $1.30. I mean, really, that's not that much in my opinion. We may actually get more upside if the volume stays lower. However, next week or this coming week, or actually tomorrow, starting Monday may have some low volume, so we may get somewhat of a flat day or a little bit of a up day tomorrow. I mean, something small, nothing extravagant in my opinion. It shouldn't be very big. But after that, then we may consolidate into this 133.99 level for some additional support down there. Normally after a big move, and this again isn't that much of a big move, but after a big move down, we consolidate first. But because this move wasn't that big, there is a possibility that we go into this 133.99 first, and that's something that you need to keep your eye on the intraday to determine if that's going to happen or if we're going to actually get a bounce off this 133.99. And a lot of times what you can do is just look at the half an hour or the hourly chart. Okay. A lot of times I do look at the hourly chart, but again, there's 7.5 hours of market open. Okay, so that leaves one candle with data that's not as true as the other 7 candles. Therefore, I like to look at the half an hour chart because the half an hour chart falls within the 7.5 hours that the markets are open. So looking at the half an hour chart, we had this down move here, and then now we are kind of consolidating for another possible down move here. So that's just something to keep an eye on. If this pattern, however, does fail, then we're going to blast right back up into this 137.09 level. And the reason why there is a possibility that we could do that is because we came down again on low volume. Okay. And again, the move wasn't all that big. So bottom line is, tomorrow I'm probably going to stay neutral simply because Monday is low volume, and that's natural for Mondays and Fridays and day before and day after holidays. And last week was a 4th of July week, which is normally low volume simply because everybody's on vacation. Okay, so low volume gives an upside bias, and normally I stay away from shorting any trades when there's low volume, even though on Friday the low volume didn't help it too much. Okay, so now think about it. We're going to have some support here at this 133.99. We're going to have low volume on Monday. Well, not going to, but more. The chances are 75% chance that we will have low volume on Monday, and that gives an upside bias. We did come down on Friday on very low volume. Well, I wouldn't say very low, but pretty low volume. You can't really, again, this candle here, don't really look at this candle because this was a half a day when the markets were open the day before 4th of July. So this was only half a day open. So you really can't look at it that way. This volume was still higher than this one, but this is the kind of volume I want to see. These candles here, all these candles here, this is the kind of volume that I want to see when I look for either exhaustion or a big move either to the upside or downside. If we had any kind of volume like that after a move that we had on Friday, then yeah, I would expect definitely more downside to come. However, we did come down on low volume, so there is a possibility after we hit 133.99 we get a bounce. Okay, that's just something that you might want to keep your eye on, and that's something I'm definitely going to keep my eye on. Okay, so I'm gonna stay neutral because we have a upside bias on Monday, and that's based on volume, as well as that's basically based on volume. Okay, and then we have this 133.99. So if we hit this 133.99 on Monday, say we gap down into this 133.99, then yeah, maybe I'll take an intraday short trade. I'm sorry, intraday long trade on the 133.99 because it'll be definitely in my favor because we have this calculated level, these two moving averages, plus we have low volume bias upside. I do think though, however, we will probably continue down lower simply because of the way the dollar looks. Okay, but just keep this in mind, the trend is still down. The overall trend is down. If you look at the weekly, get a weekly chart, we have the high here, we have a lower high, and we have another lower high. Okay, and then we have a low here. This is somewhat of a pivot, so we have a low here and a lower low, and this high has not been able to break above this high up here, which is 141.36. Okay, which is another calculated level, has not been able to get there yet. Therefore, the trend is still down in the longer term. In the shorter term, however, as you can see, we have a low here, and we have a higher low, and then sorry about that, and then we have a high here, and we definitely have a higher high and another higher high here. Okay, so in the short term, in the very short term, it does look like that the trend has changed because two valid. We have one valid here, we have one valid here. That's enough. These two valid points here is enough to constitute a trend change in the very short term. Okay, so just keep that in mind, and that's another reason why this 133.99 looks very attractive to me in the short term. In the long term, though, a counter trend trade, like I said before, and I keep on saying that if you do a counter trend trade, you want to go with the trend because the trend is your friend. If you go against the trend, then chances are the risk is definitely higher. And if you're wrong in the move, meaning if the trend is down and you're wrong and you enter the market and the market starts going higher, it's not going to hurt you as much simply because it'll easily come back down because it's going against the trend. I hope you guys understand that. That's the way I think when I trade the markets. So that's basically what the charts are telling me right now. So let's get into some other things. Alright, this is the chart of the UUP. Just a quick update. We still have this 2216 level. This level was created on this day here. Okay, so just keep that in mind. I may have to do a recalculation simply because we did have a big move up in the dollar. Normally when we have a big move, I have to recalculate, but I'd have to reanalyze this data first. We will have some resistance up here on the dollar, which will give some downside or so if we get into here, that'll give downside to the market. Alright, and then if say we do get a bounce off, then we'll get some upside in the market as well, because the dollar is opposite of the market. Dollar up, market down, dollar down, market up. It's as simple as that. It's not dollar for dollar, but it is for tick. Okay, and we broke down from this trend line here. We did not confirm, which we would need a close below this candle here. We did not confirm, and that's probably why we jumped right back into this trend line here, and then we had this day over here, and I said, okay, if we get a close above this day here, then that confirms the move. We definitely got that. I didn't think it would be this big, but we have definitely confirmed that break in. I don't know if you call it a break in, but we definitely confirmed this move from this day here. Okay, so now we're all the way up here, so there's definitely gonna have some resistance up here. How long it holds is the question. I do still have I do not have a calculation for the UUP. Let's jump over to the DX. Alright, this is the chart of the US dollar. Again, it's just this is using the DX instead, and we have this $80.61 support level, and we have this 85.23 resistance level, and it looks like the DX is already into some major resistance, and we're getting somewhat of a pullback. This is the after hour pullback over here. Okay, so dollar down, markets up, etc. Okay, so we're gonna have some resistance here, which could possibly give some upside in the markets tomorrow, and that's why I'm kind of neutral in the markets tomorrow, because I'm getting conflicting data. All right, so that's just something to watch. Tuesday I'll probably make a decision if I'm going to short the market or not. If we break out from this point here on substantial volume, then I'll definitely be looking to short the markets on any stock that's hitting its resistance point. Okay. Speaking of stocks, let's get into some stocks here. This is a stock of Apple. Everybody likes Apple. And then something I want to discuss about Apple. So I have these levels here, and they've been holding up pretty well. Okay, so we had this upper trend line here, and I said that if it gets past the 649 level, okay, the 649 level, the next level there would be 612.34. It went right into the 612.34, and then we got a bounce right off of that. We also got a bounce off this upper trend line here. So this gives a lot of resistance in my opinion. Where did it go? It went right into the 649 level, $600.49 level. The low for Friday was actually 601 and 58 cents, which is about $1 off, and a $600 stock. That's not bad. So we got some support off this level. An intraday trade, you would have got let's see, if we the low was 601.58, the actual close was 605.88, so that's about a $4 increase on Apple. Now here's something to keep in mind: the markets took a dump on Friday. Okay, it wasn't a major dump, but it was a dump. Apple actually only closed down only $4.06. To me, Apple is still a stock in relative strength, obviously. Okay, we did not get substantial volume, meaning this volume was not higher than the day before, which was Thursday. Okay, so this is telling me that Apple still has some strength, meaning there is still a possibility that Apple could go higher. Okay, so that's something to keep an eye on. Normally when you have a move like this, though, you normally see eventually a breakdown. So what am I talking about? This is a down move here. We have a bearish consolidation here, or a bear flag, if you will. And normally you wait for a breakdown, and that breakdown is that's what I've been trying to say in other videos. It's not only about price, it's also about timing, right? You gotta know when a stock is gonna look weak, or a stock is ready to break down. If Apple is ready to break down at the 612.34 level, then so be it. You take a short, and then Apple will break down. But timing is everything, right? So if Monday is a low volume day and it gives an upside bias to the markets, why would I be shorting a stock that's in relative strength? Like I've been also mentioning in previous videos, you want to short weak stocks and go long strong stocks. It only makes sense. I mean, if you go short a strong stock, a stock that something like Apple, then even in a weak market, Apple won't go down very much, and you won't make as much money. And if the markets somehow catch a bid because you're wrong in the direction of the market, then these are going to be leaders. These are the stocks that are going to go flying high like a rocket, and then your shorts would just be demolished, and you'll probably get some margin call or something like that. Okay. Another thing to keep in mind with Apple, we do have earnings coming up on the 24th of this month. So July 24th, 2012 is earnings on Apple. So you just want to keep in mind that this day here, if the day ever reaches around here, or 7 days before here, I stay out of the trade, meaning I don't even look at Apple and I move on to the next one. Again, earnings season is right around the corner. But just to show you the analysis on Apple, we had this upper trend line plus this 612.34 level, which definitely held. And again, the pink level is the percentage level, and that held up pretty well, and I'm pretty happy with that. We got a bounce off of it. Will it continue down? That remains to be seen. If we can get down to this 586.58 level, then we'll just look for any close below this trend line here to solidify a possible sell-off before earnings. Okay. So pretty much for now, at least until tomorrow's end of day closing, or close to the end of day tomorrow, I'm going to stay in cash. Simply because I don't know what's going to happen on Monday. I'll get better analysis, better data, and then I can do better calculations after Monday's trades. So in any case, we have this FCX. The FCX went into this 36.06 level. The high of that day on Thursday was actually 36 flat, so that's about 6 cents off, and that's not too shabby. I was actually waiting for this 36.35 level to hit, and that's just to be on the safe side. Obviously that didn't happen. If I continued or still shorted this stock, then I would be chasing, and that's definitely not what I want to do. So what do I do with the FCX? I move this guy up simply because this trade here, this 36.01, or is this, I'm sorry, this $38.01 level here, which coincides with this 382 and the 200 moving average, and it's a mathematically percentage calculated level here, is somewhere that I would definitely take another short trade. So if we get, say, a bounce off of these two moving averages here, we go into this 138, I'm sorry, this 3801 level, then I'll definitely be taking a short, and my short will be all the way back down into this this upper trend line here, because stocks like to visit the trend lines that they break out from. So that's something that I'm just gonna have to wait for. It definitely could come all the way down here first before going higher. Again, that's why I need to watch Monday's trade to see what's gonna happen and see what happens with FCX. FCX, however, was simply only down 46 cents, so it's not that much of a big deal. We actually opened and then we came down and we actually sold in the positive, but we just couldn't recover from yesterday's closing. Okay, so that's just one thing to keep an eye on. We could still get into this 136.35 level before getting a bounce back down. Again, the SPY went down on low volume. If you look at the volume on the FCX here, we got two high volume candles here. Just signified that it could possibly go lower. I did not take the short trade simply because you know, it's a 4th of July week and sometimes it happens. I have to take a high side bias. I would never make a trade on the high side bias, but you know, I stay away from any shorts when that happens. And then the next day we got high volume again, but a little bit lower. So what I want to see in the FCX before expecting a bounce back up here is actually lower volume, maybe low volume here, something like that, and then another high volume spike. So it spikes around here, just as an example, creates a doji candle somewhat over here, then I'll look to go for a long trade on the FCX. Okay, but again, ultimately I want this 3801 level, and let me show you also why. The reason for that is this is the weekly chart of the FCX. Let me just zoom in here. This 50 moving average is coming down right into this 3801 level. Okay, and that's going to be a pretty powerful level in my opinion. And this is the weekly chart. And again, the higher time frame always trumps the lower time frame. And right now, in all honesty, however, this is still a bearish consolidation pattern in my opinion. We have this down move from up here, and then now we're consolidating bearishly. So if we can get up into this 130, I mean, if we can get into this 3801 level, so we would say consolidate all the way up there. I don't know if it gets there, but if it does, then you can be pretty sure that I'll probably be taking a short at that time. Again, it really depends on what time of the year it is. Earnings comes out on the FCX for on the 19th, so that's another thing that I have to watch out for. I mean, if say they get good news or whatever the fact may be, then we could pop right into 3801, and then I'll probably take a trade to the short side. What I want to see is a pop into this, say, 36.35 level, and then we float into this 3801 level, and then I'll take a short. I'll pop directly into this 3801 level. You know, I may take a step back and reanalyze after that. Alright, this is a daily chart of the JJC. Let me load my drawings in there. I had a level here at 45.13. I mean, you can definitely check my previous videos. This obviously this calculation. Oh, and this is what I love about these calculations. This is what I was talking about earlier in the video. I also had another mathematically calculated level which was at 45.28, and then I had one 45.19. Both of them, one is gray and one is pink, which means one is based on percentage and one is based on hard numbers. When they both coincide with each other, when they're both close to each other like this, and this gives a pretty good ceiling. And this happened. This drop actually happened when the markets went up, so that tells me that these mathematically calculated levels are actually pretty good. Most people were waiting for this gap window here. As you can see, it was pretty close, and a lot of people missed that trade. I also missed this trade because I'm still testing this pink line here, but it looks like when they're very close together like this, and it was also coinciding with this 50% Fibonacci retracement level. I mean, we got a huge sell-off of the JJC, and you know, I'm just gonna have to do another calculation on this guy to see how low it's gonna go before it continues to go lower. You know, in my opinion, that's just something I gotta really look at. You know, for me, the JJC is still in a downtrend and still weak, so I'm gonna have to wait for the JJC to bounce before I have it reshorted. Again, too late already to chase. Okay, but I just wanted to show you an example of these two mathematically calculated levels, how powerful it is when they're close together. Obviously, nothing is 100% guarantee. I'm not saying that it is. All I'm saying is it's something that I look at. when price gets close to these calculations, it's definitely opens my eyes, and I get interested in that the price, as long as it coincides with other things like this gap window here. For example, if it had broken out of these two mathematically calculated levels here, then this gap window here and this 200 moving average should have given me a lot of resistance before coming back down, in case those calculated levels did not work. But they seem to be working pretty good so far, so we'll just see what happens. This is a daily chart of Walmart. Now this is a beast, okay? This is one of the stocks that I've been, in almost every single video that I've had, I've been watching Walmart and how powerful Walmart has been. I mean, the markets were down $1.30 on the SPY, and Walmart caught a bid at 28 cents. In fact, to be honest, Walmart is actually one of the stocks that were one of the 5% stocks in my watch list that was actually in the green. Okay, I still have this level at 72.22. However, I did a percentage calculation on Walmart, and I do not have one. This Walmart has just been going way too high, way too fast. The percentage calculation is just blown by. This tells me that Walmart is definitely an overextended stock, meaning it's got to come down sooner or later. So this 72.22 level is just a hard number mathematical calculation based on a specific pattern on each chart that I look at. Okay, so one thing that I do want to look at, because I did take a short trade on Walmart in the past and I've made money off of these trend lines here. So we do have this trend line here from this pivot point here, all right, and then we have all these pivot points here, okay, and it leads up to this 72.22. I actually have another level here, I believe at 72.91 or something like that. I'm gonna have to validate that, but let me just add that in here so I know to change it. But there was one at 72.92 or 91 or something like that. It was around there. So now the question is, if Walmart had gotten, I'm sorry, let me grab my trend line here too. If Walmart had gotten to this price on this day here, then I probably would have taken the short trade. Why? Because it coincides with the 72.22 mathematically calculated level plus the trend line. Now it does not. So oops, I deleted that. So the 72.90 whatever, so let me just get that in there. 72, let's just go with 72.98 just as an example. I got a hard coded in. If we can get there, say sometime in the middle of next week, then it also will coincide with this upper trend line here, and it'll give this again, I need to have multiple factors. I don't trade just because it hits a trend line. That's not enough for me. It's got to hit a moving average plus a trend line, or a gap fill gap window plus a trend line, or pivot point. Something's, you got to have combinations in there. That way the odds are more likely in your favor that the move that you expect it to make will happen. Okay, so in any case, the 72.22, I may not actually take a trade off of that, maybe an intraday trade. All right, because these mathematically calculated levels, let me tell you, I mean, they don't always work, but they've been working pretty well. So an intraday trade, I'd be interested in the 72.22 level, but as a swing trade, I'm gonna wait till it hits an actual level plus coincides with this upper trend line here before taking a short trade. Okay. Alright, this is a chart of Amazon, and if you look at my previous videos, you will see that this calculation was made on this day here. This 229.75 was a mathematically calculated level again, and Amazon went right into it and then just pulled back. Now Amazon may see some support around here. We have the moving averages plus this trend line here. I did not calculate a level to the downside yet. Amazon is one of those strong stocks that you want to be very careful when you're shorting, because it is a strong stock. Anytime the markets catch a bid, these are the stocks that are going to be leaders. Okay, so keep that in mind. Like the JJC I showed you and the FCX, those are stocks in weakness. So you want to short those that are in weakness. You know what I mean? Because that only makes sense. Okay. Now this is a chart of gold. I haven't done any calculations on gold, but I'll probably do it for the video on Monday. But right now it's too late to short gold anyway, so I'm gonna have to wait for some sort of a bounce. Some sort of so we have this down move, so any kind of consolidation pattern, maybe another consolidation pattern into this upper trend line over here. So we have this down move, say we consolidate back into this trend line, which would be preferable, or we just consolidate, we go sideways, then I will take another short trade on gold, because gold is obviously a ETF in weakness. We have this downtrend, we have this trend line all pointing down, we have a high, lower, high, lower, high, lower, high, and then low, lower, 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 low, etc., etc. So again, this is a stock in definite weakness. We should get a pop eventually. I do have a level here at 160.71. If so somehow gold can get up to here, you know, big. I've seen gold pop real big, like these two candles here. When it went down big, look at this candle here. It is definitely possible we can get into this 160.71 within, you know, one day. If it does this in one day, though, I don't think I'll take a short, but it is definitely possible. I mean, look at that. I mean, it could pop all the way up into this upper trend line, which is on the weekly, at any time that it feels like it wants to. Okay. Speaking of the weekly, let's look at the weekly. Now, if you look at the weekly, right, there is a possibility that we can bounce into this 160.71. Let me just zoom over here. We have this upper trend line here, and we have this 160.71. We also have this 50 moving average. We get into this 160.71 level anytime soon, then I'll probably take a short trade. You know, within the first weeks, I'll probably take a short trade. In addition to that, again, we have these two mathematically calculated levels all in the same area. We have this 200 moving average, and I bet you, if anything, there might be a Fibonacci retracement level somewhere on this chart. Let's just take a chance here while I make this video. Nope, probably not there. Alright, so yeah, maybe. Oh, yeah, there you go. So it also has a 50% Fibonacci retracement right at this level, which is a 160.71. So, you know, I may wait for it to hit that level first. If I think it can, then I'll probably hold back. But if I don't think it can, then I'll probably take a short trade on gold. But I'll let you guys know before I make the actual trade or what I'm thinking. In any case, again, none of these are recommendations. These are simply my opinion, what I see on the charts and what I think is may or may not happen. But definitely out of time right now. I know I said I was going to keep this video short, but you know, I guess I talked too much. In any case, this is your 7-minute market update. God bless to you all. Good luck to your trading next week, and I hope to see you in the next video.